All right, we're getting everybody in. Happy Friday, folks.
Do you think we'll have the usual 1,000+ Melissa on the call, given that it's Friday before Labor Day?
It's a Friday before Labor Day. I don't know. We'll see. They're coming in.
And are you golfing every day this weekend?
Not every day, but a little bit, yes.
2 out of 3.
Yeah, 2 out of 3. And Ira, you're totally right. I have everyone on that matters. That's right. Happy
That's
Friday.
right.
Love it. And Mark, that's awesome. Thanks, guys. Happy to have you on. I wonder if Zoom still does can I do that? Maybe it's just a Teams thing. Oh, well, now you know what I mean, but in Teams, there's like little red hearts that like float out. I think I have to.
Or if you put your thumb up, it goes up. Yeah. Yes.
Yeah, for a while, Rob was having me do the little lasers that you do. And I don't know. I think I need to upgrade my, I don't know, operating system or something to make that happen. Well, we're excited to have everybody on with us. Hey, in case we have not met before, my name is Melissa Langdale, and I'm the president and COO of the Mortgage Collaborative. As always, my co-host is Rob Chrisman, and today's very special guest is John Hardesty, who's the general manager of Argyle. Thanks for joining us, John.
Of course. Happy to be here.
Ah,
All right. I have a question before my next question, Melissa. John,
okay.
so you're a general manager. So what's the difference between that and a president and a chief operating officer or a CEO?
Rob, I hope the rest of the Argyle team is on because I don't know the answer to that. Basically, the GM title, in my own terms, is responsible for all things mortgage at Argyle. So I'm still figuring it out. I've been here doing this thing for 2.5 years. So every day is different.
All you know is that at the end of some year, they said, instead of a raise, we're going to make you a general manager. And you were like, yeah.
Yeah, I'm a big sporty, so I got the title. I'm like, okay, I'm like the GM of like the Browns, right? That's a responsible title.
Yeah.
Well, and that is really fitting because this is, what I would consider the start of football, right? I know there were some games last week. Like, I don't want to see a whole bunch of stuff in the chat about Melissa, you're wrong. I recognize there was football last weekend, except my Clemson Tigers did not play, and therefore it did not actually start for me. So football season officially starts this weekend.
So not only, Melissa, should you read the joke today, which I thought was a good joke,
yeah,
but the first link in my opening paragraph today, you should definitely check out since you're a football,
all right.
You're a football fan. You should click on that first link in the opening paragraph. It's entertaining and it's G-rated.
And it's G-rated. Okay. Linda, I can't believe it. Oh, here we go. Go Tigers. So Linda put Go Dogs in the chat for everybody that is not on chat. Clemson plays Georgia this weekend. So we're gonna dominate. I'm just gonna predict it. It's gonna happen. All right, so let's get started with some trivia while we have a few minutes. Can we do it? All right. Rob, I actually stole this one from your commentary. So
wait a minute, I thought I got to ask the first question.
Oh, okay. You can ask the first question.
The game plan is crumbling already here, Melissa.
I'm sorry.
Hasn't even been fired.
I'm going off script and we haven't even started.
So my trivia question, and I'm trying to figure out a way to work this into the commentary, but I figured it would be entertaining because so many people are going to the TMC event next weekend in Denver. And I'm sure everyone's ready for their keyboards and doing the Google search here, but there are 5 countries in the world that do not have airports. Name the 5 countries in the world that don't have an airport.
Oh, good gravy.
Wow.
Wait, did you say good gravy?
I did. Is that a new one for you?
Wow.
I did. So Rob sends me over this like list of all of the like Southernisms that are non-cuss words, but actually used by people as,
Oh, look
um,
at Mark. Look at
oh, we got it. Anyways, good gravy was one of the words.
anyway, the group has already blown through my trivia question with Monaco, Liechtenstein, Andorra, Vatican City, and San Marino, which are all European countries. You'd think there would be a country in Africa or Asia, but no, they're all little countries in Europe.
All right.
So
I would have
anyway,
guessed Africa or Asia
I
too.
can say I learned something today, Rob. There it is. Thank you.
People are not using Google anymore. They're using ChatGPT. Apparently the secret is out. It's, yeah. All right. Now we know another use for AI, guys.
all right.
All right. The question that I stole from Rob's commentary this morning, what year was Labor Day officially voted in as a national holiday?
Come on, John, give it a shot. And don't look at.
Oh
Ooh.
man. I'll say 1896.
Oh, you're close. Mark says 1882. Rob, what was your answer?
I'm not going to say.
You're not going to say?
It was in my commentary. I'm not going to.
It's in your commentary. Rob says 1894. All right, we got some other answers in there. I need to fact check Rob now.
You need to do
Where's
what?
where's
Fact
the
check.
AI?
Yeah, Mark says 1894 is correct. Awesome. All right. Well, let's get on to some mortgage related news. Oh, he was too quick on the keyboard. All right. John, tell us a little bit about Argyle for those that may not have a good awareness of who you guys are and what you can offer. Give us a good overview.
Yeah, absolutely. And again, Melissa, Rob, happy to be here. What's the saying? Long time listener, first time caller. So thanks for having me on. Argyle, if you haven't heard of us, we play in verification of income and employment. Established in 2018 and really spent the first 3-4 years of our company building a way for consumers to connect their payroll accounts. In late 2022, we built basically a mortgage team, and what we've done since then is bring this product to the market. Now with both Fannie and Freddie on board in terms of rep and warrant, which I know we're going to be talking about some repurchase stuff later on. But we're a way for consumers, if you're familiar with the asset movement, we're a way for consumers to find where they get paid and then share their income and employment data back to the lender through the manufacturing process. So overall, it's been a really, really fun ride. We often refer to ourselves as this Argyle movement, this new way of doing income and employment. And funny, the best part is we're really just getting started. So we've got, I think now like 26 members in the TMC family that have joined this movement, and a lot more to come. So it's been really fun.
I love it. TMC has a benchmarking tool for those of you that have not used it before. It basically allows for lenders to kind of compare their loan data with other kind of peers within the network. And, one of the metrics that we watch a lot is that timeline between an application to CTC. And oftentimes that kind of verification space can make a big difference in that timeline. So I'd love to hear, like, what are you seeing from customers? Is it really possible to shorten that time frame by leveraging some direct to data connections upfront?
Yeah, it's a question, Melissa, and the short answer is absolutely. I think the manner in which our platform works solves a lot of pains that typically delay a loan cycle. And two scenarios, right? The best scenario, the happy path, is you're going to run a verification, you get rep and warrant, you throw that number into your dual AUS, and you decision and you move on. That's rather instant, right? Any provider really provides that. But the unhappy path, which I think a lot of people on this call would agree, is that hey, you've got multiple jobs, you need a year-end pay stub for variable commission. Oh, they went on leave, you got to find this document. Um, with Argyle, our business model, our data set is not only verification reports, but it's direct source income documentation. So instead of chasing and running around and trying to go back to the borrower, and we're very concerned about the borrower experience, we think about it as one simple authentication solves that. You can go back, find Rob's year-end pay stub, find the second he went on leave and the last pay stub that he had. So you just move this what can be a really cumbersome process into like a very streamlined borrower experience. And we work with over 100 clients today, and one of them is a top 5 originator out there. 8 months on the platform, they self-reported to us 5 to 7 days faster in terms of loan manufacturing, getting to clear to close with Argyle. And it's simply because our data set is just drastically different in what we provide versus some other legacy providers out there. So yes, and frankly, it's the story that our team has really adapted to, I'd say, over the last 18 months is, it's, cost is one thing, but let's think about how we can really bring your operations full speed and full speed ahead. So yes, yes, and yes, Melissa, to that question.
12 days is a lot. Yeah, I mean, a lot from a consumer experience, a lot just, I mean, and how you manage your operations. That's huge. I'd be curious to know how many of their borrowers were self-employed.
Yeah, yeah, yeah. And
There's some
no, I was just going to add, another interesting piece of any consumer permission platform is that moving it up funnel makes a lot of sense, whether it's in the point of sale where the consumer is applying for the loan, and just that timing plus the data set that you get allows for kind of endless opportunities in terms of cycle times. And that's the story we love to talk about.
So John, you said you have 26 TMC members as clients.
Mm-hmm. That's correct.
Congratulations on that.
Thank you. Thank you.
Did you join TMC to because so many of your clients were members, or did you join TMC in order to have access to maybe some new clients?
Yeah, it's a great question, Rob. And Melissa's heard this before. Not just at Argyle. I've always been a long fan of TMC when my days at Black Knight and Surefire back in the day. And when I got to Argyle almost 2.5 years ago, I knew this would be a great fit in terms of the way we think about supporting our clients the way the TMC does. It definitely helped to, and I'm going to put him on the spot here. I don't know if he's on. John Harps at Lake Michigan, Eric Burgoon, some of our early adopters at the collaborative really pushed us to really have a voice and come to TMC and say, hey, let's work this out, because I think there's a lot valuable that we can do together. So I think it's a little bit of both. And when there's Paul, I know Paul's here from Quake. Yes, there's another one. But Rob, it was more of like, we want to come in and tell the story and provide this benefit. And we thought TMC was the perfect partner to bring the technology into.
So typically a company that uses, let's say, a hedging vendor, pick one, Vice Capital, MCT, whoever, CMC, I list them all, but they will pick one and go with that one. And there's very little redundancy. It's not like, oh, I think I'll have MCM and MCT, and one hedge my government pipeline and the other hedge my conventional pipeline. Is there redundancy in what you're doing? Put another way, would a lender have more than one verification vendor as a backup, or to play one off the other, or do most companies just have one?
I would say it's important that no verification provider covers 100% of every consumer, whether they're self-employed, wage earner, et cetera. So there's a lot of debate, and I think you may have written about this, the waterfall. What's the best waterfall? How do you place it together with makes economic sense, coverage, conversion, all this stuff? So you definitely need multiple. what I would probably say is the manner in which you're going, what tools you're using in your waterfall to get your data is something you should consider, right? You don't want multiple consumer permission platforms. You don't want multiple, maybe expensive databases. How much do you want to lean into your team for manual underwrites, right? All of these questions, you want to pick, if you're building your own waterfall, which are best in class that fit my flow and my price point, and then, go from there. So anyone that says they're 100%, good for you. You got a good business. That's really hard to do.
John, I've heard from lenders recently where there's, obviously the cost of origination is something that it's top of mind for most of our members. Still well over $10,000 a loan, right? And so, especially right now in the market, although volume's picked up, apps are looking up a little bit. Folks are still looking at the right ways to save money and cut costs. And so you mentioned the waterfall being one of those strategies. I have seen some lenders actually pulling back from the upfront direct to data connection though, and doing it later on in the process to try to help, keep the cost where it's closer to where they would normally see a lead convert to a full application. I'm curious how you're helping lenders navigate that decision. I'm a huge technology fan. And so I'm like, oh, direct to data, like there's so many downstream impacts that could help with that. But it is a cost you're incurring up front before you really have any, revenue on the loan. And so a lot of lenders, I think, are in that space where they're trying to figure it out.
Yeah, I think we have this conversation all the time. For example, we just announced we've gone deeper into the Encino Mortgage Suite to allow our experience top of funnel in the 1003 experience. But I think one of the things that we often debate, right? Do you want more choice and control? Do you want it closer to underwriting? And so you can look at the loan file, feel confident you got everything, and then move. But I think and this is the last month, it's a great question, because the last month or so, as we're anticipating hopefully what's going to come, more lenders are saying, okay, speed to lead is really back. And, selfishly, Argyle and our price point, the way that we work, we have the ability to not just offer one report, but we might say, here's a pre-qual report at a different price point that gets us further up the funnel so that we can, again, speed to qualification, speed timing. So, we have these conversations all the time. And I'd say a year ago, a lot of companies like us were like, we got to get deeper into the Encompass integrations and the empowers, right? Because people want to just order us at the right time. I'll be interesting to watch. Again, the last month has been different. People are like, all right, I'm gearing up again. Let's go. Let's put you more top of the funnel. So the question to ask your verification provider is, what kind of configurability can I have to put you to top and feel comfortable that I'm not wasting money and it's hurting my P&L. So that's a common conversation that we have, and we're lucky enough to be very, very configurable in that way to support that use case.
That's great. The other thing we hear often is, one of the things that's driving the cost of origination as high as it is, outside of like loan officer compensation, which is a big component of it, is kind of the layer upon layer upon layer of technology that lenders are implementing, right? And so they're really looking at, if I go down the road of taking on this new vendor relationship or partner relationship, how can I really measure ROI for that relationship? So can you walk us through a little bit of how you're helping lenders navigate that?
Absolutely. ROI is interesting in the Argyle world, or any call it nicer price point to the eye, right? Because you're like, all right, like I'm going to call you, Rob Chrisman or Melissa, and say, I'm going to save you 80%. And that's going to be how we judge ROI. But honestly, we have to take it a step further when we think about ROI. So we get onto a new client and we say, look, let's take cost out of it. We can get there. But in order to get there, what we should be judging ourselves on is adoption and change management. And what are the KPIs that we need to hit, in this process of implementing for us to get to our cost goal. Second part is like conversion. How open are you to bringing this experience to your consumer? Again, in our words. So the idea of ROI is super important. And I would challenge folks that, like, your technology partners, the amazing partners we have in the TMC network, like we should all be going to lenders and saying, not just on like the core, whatever your core value proposition is, but how do you get there, and then judge your return on investment off of, did you meet satisfactory each one of those milestones to really see the impact that you want to give. We spend more and more of our time, and we've invested a lot in people and talent to bring in mortgage people that have underwritten loans or originated loans, right? Because they know, they sat in the shoes of the folks that are using our software day to day. And it's just really, really important that the training, implementation, change management, having those kind of conversations with executives is crucial. Or else, and I'll be the first to admit, if you bought our software today and turned it on, you're probably not going to have a good experience unless you're bought into change management, you understand what the KPIs are working for, and it's not solely just on saving 80% of traditional methods. So that was long-winded to say, yes, you should have these conversations on ROI with your partners.
Is there any component that folks are looking into around the repurchase risk? As they're starting to look at ROIs, or is there an extension that goes into, well, my repurchase risk is lower, or has anybody started to measure that?
Yeah, absolutely. And I think as more folks like Argyle are getting rep and warrant relief through Fannie and Freddie, the repurchase conversation, I mean, it's fascinating. There's a Housing Wire article over the summer that's like, 1 in 125 loans are repurchased, and of those, 1 in 3 are income and employment defects, right? So one data set, especially with Fannie, we're newer with Freddie, we're really looking in at our rep and warrant, the rates in which our clients are getting rep and warrant relief, and making changes, finding better ways to enhance it, because we want to be a trusted data source. And I think inherently Argyle, because we are going direct to source to get these income and employment documentation and data, helps there, but still you have to be protectful of what the risks that a lender partner could have if things don't go your way. So I know we work really hard on it. It's a conversation that we share those statistics to our clients of, hey, this was our rate with XGSC this month, and here's what we're going to do to try to get it a couple percentage points higher, right? So it's a great question, Melissa, and it's something we take really, really serious on behalf of our clients.
You talked about Happy Path earlier too, those,
Yeah.
I make X amount as a set salary per year, W-2 employee, versus the self-employed with 16 different rental properties, or even like the gig economy worker, right? I work this job 9 to 5, but yet I drive Uber or Instacart, or, whatever else may be possible for them in addition to their normal job. Are there solutions right now to capture more of what appears to be more of like cash movement rather than easy to document earnings, especially for those gig workers?
Yeah, I think so. And not to take us going back to the first question about our roots, but it's really funny. The story we tell a lot on gig, because we see it kind of as an emerging market as mortgage professionals, right? More and more of these people are having that side hustle. And how can I use this data to fill a gap, or can it be used, right? And Argyle, funny enough, our founder, Shmulik Fishman, like built this platform to verify Uber drivers and that segment. And what we're seeing, fast forward to today, I was on a call yesterday where we brought up the gig space, and they're like, wait, can you rewind? You guys can do that? Because we're starting to see an influx of people trying to use this part-time employment, gig employment, to qualify. And we're talking to both GSEs about it, because it is truly something that is coming. And I just think like this is a normal shift of what happens when any market shifts. There's new income sources, and I will tell you that the gig space is tough, because we think of base income or variable income. We're talking about shifts and connections, and how many rides they took. So there's a lot to go here, but it's really exciting that there's tools like Argyle that can go and do this for you. And we'll have to wait and see. And I'm sure, Rob, you might write about it here in the coming months of where this gig space is going in terms of qualifying income for a mortgage. I think it's certainly on the way.
I see it no different than part-time income calculations. I mean, frankly, there's, and in some cases seasonal work. I mean, all of those things are recognized by the GSEs today, but there could be some further clarification around guidelines to help lenders to navigate that the right way. I'm sorry, Rob, what were you going to say?
Well, I wanted to ask John if, in your meetings, your Argyle senior management meetings, does the team look at other businesses that Argyle might enter? Because I know not that everybody has to expand like that, but I know different companies go into, say, credit reports, or not only income verification, but like a little more sleuthing around for borrowers on behalf of lenders. I mean, when Argyle looks at the spectrum that's out there, do you discuss getting into other business channels?
Yeah, I think it's always a strategic priority to think about what's coming, what's next, where else could we play. So do we have those conversations? Of course we do. But here's what I will say, like, and it's kind of what I love about Argyle, is our focus on being the highest converting income and employment solution and staying in our lane until we feel like we've solved it, right? And I think there's a lot in the income and employment space, Rob, outside of just your wage earner, maybe what's typical today, that we can still maintain that focus and expand our reach to help lenders qualify more borrowers, right, or verify more borrowers. So I think our focus in the short term remains on income and employment, but of course we're always in that roadmap of where we could go as a company. We entertain, because there's a lot out there on single source validation. I think is an idea there, right? How do we play with folks in that space, and how can we still be leveraged in that movement? And it's really exciting, I think, and we'll see where we go.
I love it. I think there's, well, it would be interesting to me to see what success looks like for you guys there, right? As you look at, we feel like we've really done, we own this space. What that really looks like, is it an expansion of 100% of the employment market? And to me that seems so overwhelming, because there's so many small business owners that I feel like the lenders that I talk to, the challenges that they're having in verification space are for those kind of small business owners connecting into these larger data sets. Do you see that changing at all?
It's always going to be a challenge, right? And it's a challenge for every verification provider, because you want to be the most comprehensive, tool on the market. What I'll say, Melissa, to your first point of your question is, how do we know success when we're there, right? And for us, I think it is, one, converting at such a level that using a software like Argyle makes just sense. Conversion meaning, hey, you send the borrower the Argyle experience 9 times out of 10, you're converting. So that's our first focus, is really conversion. I'd say the second is just continued on data quality. As you can imagine, these payroll systems and employers, they change their data all the time. And we want to maintain a scale where when Lake Michigan runs a report, we're bringing that report back pure, clean every single time. So the idea is conversion, coverage, and just continuing to get this movement into more hands in the mortgage industry. I think once we do that, who knows where we'll go at that point.
I love it.
So do I get my last question, Melissa?
I was just going to ask you for it.
So, John, there's a lot of there's some backlash or a move towards keeping information private. My kids say, well, privacy's gone out the door, and we hear about these data breaches all the time. How do you have things changed to get consumers more involved in what you're trying to do? Or asked another way, how do you deal with their consumers who may not want to provide the information that you need to do your job?
Yeah, there'll always be a group, Rob. Like, again, going back to 100% coverage, like we're not a database product, right? We don't have your information in the back. I think a good correlation here is like assets 5 years ago. No one's going to do that. No one's going to put in their bank information. Now, what we see, a partner like Finicity says, 60, 70% of the time, consumers are getting there. I personally just think payroll is behind that. And the more, a lot of going back to my comment on how we train to this, we implement this. You have to almost give the lender a talk track on how to bring the consumer to be comfortable with the experience of what they're doing. And over time, that education across any consumer permission platform brings more confidence, and then more consumers then feel like this is just normal. And it's like your Venmo, right? Now I'll hit Melissa up with a Venmo, bang, 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 and not thinking that my bank account's connected to it. That's where we hope, with education, with good storytelling, with really saying to the consumer, this is your data, ship it where you want. Over time, people are going to be more comfortable. But again, it will never be 100% because there's always going to be someone that's like, I'm not doing this. I'm printing out my pay stubs and W-2s. I'll walk them into the branch and give them to the loan officer myself. So we're taking strides. Hopefully in the years to come, that number will continue to go up.
I would love to see us at a point where direct to data connections allows us to only ask a consumer for 6 to 10 things. Everything else is pre-populated based on the data set and the information that's gathered from that data set. So many of our application processes today have the consumer kind of filling out information that we frankly already know through other data sources. And, I think it would just be such a better consumer experience. Maybe eventually over time, folks like Argyle and others will help us to get there.
Dave Coleman, a good friend of mine, President Ismail, right? One-click mortgage. You wrote about that 5 or 6 years ago. One-click mortgage. Bang, got everything I need. So hopefully we'll get there.
Yep. All right, step by step, my friend. All
That's
right,
right.
happy Friday, everybody. We are all up at time. So thankful that you guys were able to join us. John, thank you so much for sharing your insights and all the wonderful things that Argyle is doing. Rob, thanks for joining us as well. And I hope everybody has a fantastic long weekend with lots of football. And we'll see you guys here again next week. Have a good one, everybody.
Go Bucks.
Look at that opening
Thanks,
link in
everybody.
my paragraph, Melissa.
All right, I'm going to go do it.
All right.
All right, bye, guys.